Welcome back, guys. You already know who it is. It's your boy E is Profitable. Today's March 3rd, 2023, and I want to go over some entries, actually one entry pattern that I think will help most of you. I do get a lot of messages, people asking me to please go over a video showing an entry pattern, and I completely understand why that's important to you guys. I know when I started in trading, I tried many different entry patterns and nothing would really work for me. So it did take a while before I was able to find a few patterns that actually was beneficial to me. And I won't say that they're actual patterns. They're more of like understandings, right? In price action. Once you see price develop a certain way, it helps you assess the situation and decide whether or not it's a high probability entry or not. Now, please keep in mind that all of my teachings are information that I've learned throughout the years from ICT. You're always welcome to go to his YouTube page. There's a vast amount of knowledge there. Please, if you haven't already, go ahead and subscribe to the channel, like the video. I also have a completely free Telegram. I am not selling any courses. I don't provide any signal services. It's simply a place where common-minded traders go to, where we share ideas and share our failures and progress. All right, so let's get straight to it. These videos are meant for educational purposes only. Any trades taken in the financial markets are under your own discretion. The information taught should be demoed and only taken to live accounts under your own responsibility. E is Profitable will not be held liable for anything you do with the information presented. All right, guys, so we're going to go ahead and use the S&P 500 as an example. I didn't take this trade. Some of it is obviously hindsight, but the idea behind this video is to hopefully give you an idea on how to get into a trade, what to look for, and then of course, like I said, with experience you can kind of make your own adjustments to it. I typically like to enter on fair value gaps. Every once in a while I'll look for an order block that I'll try to get into. So it all depends on what I see in price action. I also get into trades when I see a volume imbalance and so forth. So again, guys, if you don't understand what I'm saying, please go back into some of my previous videos. I do go over some of that stuff. The PD arrays that ICT teaches, I have a video on it that goes over all of them. And you can also go into his channel and further educate yourself on these concepts. So we are looking at today's price action. Today's March 3rd, 2023. And I just noticed that price reacted right here in this area. So typically I like to start in the 15-minute time frame. I'll take that back. I normally start in my monthly, weekly, daily, work my way down, kind of seeing where price is, where's liquidity, where I think price is going. Are there any areas of inefficiency where price might reach to, and so forth. But just using this as an example, I'm going to try to keep this very basic for you guys. We see that price reacted from this level. So typically what I would do is I would mark, I would have, let's say, this order block marked. So this is a 15-minute time frame, and I already have a template set up for the different time frames: 1 minute, 3 minute, 5 minute, all the time frames I use, and all the PD arrays that ICT teaches. I already have them as presets, so I don't have to go back in and type them manually. I can just right click, go to template, and this is a 15-minute order block. If you want to create these yourselves, it's very simple. You just create the box, you go to settings, you can put whatever text you want to them, and then you can just save them. Right click and go to save as, and then you can create whatever name you want on them. That's how you do it. All right, so this is the 15-minute order block. So let's imagine that we had that already marked before price came into it. All right, from there I would move into the 1 minute time frame. So now let's study this price action, right? This is why hindsight is very important. Like, yes, forward testing is how you're going to gain your experience, but back testing and looking at price and trying to figure out the puzzle, why did price react the way it did, is very important, right? So I want to go over a few things here. All right, so number one, in this price leg, right, which is from this bottom to this top, the first thing you want to do is you want to figure out where is the 50% mark and below. So I have this little preset here, this fib. So I'll mark this low to this high, right? And I'll extend it this way just so that you can see a little bit better, right? So from this low to this high, the 50% mark is right here. You see where it's marked 50%. So I don't want to get into the trade until price has moved below the 50%. Why below the 50%? Because that is where you will find your discount, right? You want to buy at a discount. You want to sell at a premium. So you don't want to buy above the 50% mark, because then you're not getting the best price. And that can be applied to anything. Going to a store and looking for an item, if it's at a discount, then you want to take advantage of that. You want to buy the item when it's at a discount. All right, so we're gonna wait for price to reach below, and I'll mark that in area in green below here. So let's just mark that green, right? Because that tells you that anything below this area from 50 to down here is at a discount. So it's a good area to look for buys, right? So you're not buying up here. You're not buying when once price reaches below it, then excellent. All right. So another thing that I like to do, right? I like to look at, remember this 15-minute order block. Now we want to look at, are there any PD arrays in the 1 minute? You will notice that right here you have a little gap in price. So from here to here, that is a small 1 minute fair value gap. All right. So what I would do is I will look within that 50% range, below the 50%. Are there any fair value gaps? Are there any volume imbalances? Are there any order blocks? Anything like that is very obvious, where are considered areas of inefficiency where price may want to come back to mitigate. So as you can see, you have that 1 minute fair value gap that I would have already marked, right? So the first thing I want to do, right, is I allow price to go into my within 50% range, my discounted range. I don't want to get into a buy here automatically. The reason why you don't want to do that is because you don't know for certain that price is going to react out of this 15-minute order block. Price may very much continue to go past it, and then you're going to get stopped out. So what you can do is you can wait for a second confirmation. All right. And this is what I mean by that. So price we see tapped into the 15-minute order block, and then it reacted from it. So let's go ahead and delete this for a second, right? We know that we're within that 50% range, so I can delete this. So as you can see, price broke a short-term structure here, right? You can say it's a small break of structure, right? Is that enough confirmation to get in on a trade once it does this? No, you can wait a little bit longer, right? And this is what I mean. You can wait for a second form of confirmation. So what I would do then is I would mark this high, and I would want to see price break structure one more time. So we know that price came into the 15-minute order block. This could be a fair value gap as well. Doesn't matter. We wait for price to take out short-term structure, which it did once, and then you want to wait for price to take out another short-term structure one more time. So the moment price takes out this second short-term structure, that is my confirmation that price is now looking to go higher. So what you want to do now is you want to apply the same concept that we did before. You take your fib and you mark this low to this high, right? To that high. So now what you want to do is you want to wait for price to come down to what? To come down to a discount, right? So you see how we're repeating the same thing that we did earlier in a higher time frame. We're doing it in a smaller time frame. That's why the market is fractal. Price action is fractal. So we take from this area and from the 50% and below, we know that that is a discount. We can mark that in green. So as soon as price taps, from that 50% under, that's a good opportunity for you to buy. You can buy with confidence because you know that you have a few things in your favor. You have that 15-minute order block. You got that 1 minute fair value gap that price tapped right into. We saw that price broke short-term structure once and then twice, right? So you know that as soon as price retraces, you want to get ready because there's a good possibility that you can get in. Price might not go below the 50%. Price could have stayed above the 50% and took off without you. That's fine. You have to live with that. If you want to learn how to become consistent, you have to set some rules that you have to stick to. Later on, after you gain the experience, then you can look for other ways to enter. There's multiple ways to enter here. I'm just showing you one of the most easiest ways. All right, so we're going to do the same thing that we did before where we set up that premium to discount range, right? Which is what you see here, right? You take this bottom to this high. That's the next leg up after this structure was broken, right? And then you're looking to buy when price comes below the 50% mark, which you see here that it happened clearly. You can also go down to a 1 minute, right? We're in the 1 minute, and see if there's any PD arrays within that price leg, right? And right here, immediately, you can see that there's a 1 minute fair value gap that you can go ahead and annotate as well, right? Boom. And there's also a little one right here that you can also annotate. So you see that price came right into those two 1 minute fair value gaps before taking off. At this point, you don't have to wait for any more confirmation. You already have your confirmation. Your confirmation was price coming down to your 15-minute order block. Your confirmation was price breaking structure once and then twice. That's it. Once you see that, that is your confirmation. What you're waiting for is for price to come back down within that 50% and under range, right? Because that's the opportunity for you to buy in a discount, and then you're gonna get in. You can buy in market order, which is how I do it, or you can set a limit order to get in. Where would you get in? You would get in within that 50% range. And where would you put your stop loss? You can put your stop loss at this candle because that is the lowest PD array, which you have that 1 minute fair value gap. Price should not go below that area. Number one. Number two, price should not go below that area because between this area to this area, which is that 50% and under range, you can kind of look at that like if it's its own, like if it's an order block, right? Price should not go below the 50% mark of that 50% range, if you're understanding what I'm saying here. So in the originally we were looking at this range from up here, right? From here down, we see that 50% range. So from that 50% range to down here, that becomes its own block, right? So price should not go below 50% of that block, right? So you can set your stop loss right here with confidence because price should not go below that. If you want to be more for sure, then you can set it here at the bottom. And that's still a 2.5 point stop loss. Now let's talk about TP. Where would be your TP? There's two ways to do this. I like to take out most of my positions at the next high, right? Which would be right here. Why? Because there is buy side liquidity. So you would set your most of your TP right here. If you had this marked right here as your stop loss, this could be a very easy 1 to 4.57. So let's say a 1 to 5, round it up, right? If you had it down here a little bit lower, that would be a 1 to, let's say 1 to 3, which is still very good, you know. So later on, you will learn ways to let it ride longer, looking for price to reach other areas. There's a reason why price came up there, and I won't go over that in this specific video because we're focusing more on entries. So again, you let price tap into your order block. It doesn't have to be 15 minutes. It could be an hour. It can be 10 minutes. It can be whatever you use. You let price break structure twice, 1, 2. Then you look for that next leg run. You find the 50% range within that second leg, and then you look for your entry. All right. I think I covered it all with at least this style of entry. You know, again, with experience, you can find other ways to get in a little bit sooner. All right. But again, a lot of that comes with experience, with confidence. I suggest you start with something like this or something similar. If you want to take it and tweak it, refine it in whatever way you want to, that's fine. All right. Trading is your own, right? You can learn from people. You can study how people annotate their charts and how they enter trades. But at the end of the day, it might not work because you are your own person. You view the charts your own way. You respond to price action your own way. And those are all things that you have to learn about yourself. Okay. So I hope this video was insightful. I hope I covered the majority of questions that I've been getting as far as going over an entry. I think that's a pretty solid way to enter trades. And again, you guys are more than welcome to comment, ask me further questions if you like, and or suggest other videos, topics on other videos that you would like for me to go into. All right, thank you guys for joining, and I hope you guys have a very profitable day trading. Have a good one.